This week has been quite mixed in crypto. Some tokens are up, others are down. Pump, the token of the Pump.fun ecosystem, is down the most. The question is this a potential opportunity? In the end, crypto is all about buying low and selling high, and obviously the Pump token currently is not very high. Now, in general, there is the idea that attention and price is highly correlated. As in, the more people look at a particular asset, the more likely it is that we see further purchase orders, thus an increasing price. Now, for the Pump.fun token, there is a lot of attention, but the price development is rather lackluster. Have a look at CoinGecko.com. The most viewed cryptocurrencies in the last 24 hours. The Pump.fun token is at number 1. And it's the only among the most viewed cryptocurrencies that's actually down. All the rest is up. The attention we can see on CoinGecko, we also see reflected on my personal YouTube statistics. I already published 2 videos on the token. The first one came out 1 week ago and it outperformed the average video by 58% in terms of number of views. And here's the recent video published 4 days ago that also slightly outperformed. And it's mainly search interest that's driving the traffic. Pump.fun is the most popular launchpad of meme coins on the Solana chain. Now there are several launchpads for several things. For the base chain, for example, we have the virtual protocol. That's for AI agents. Now virtual launched very differently to the Pump.fun ecosystem. Virtual already started with its own token, and so naturally, as the trading of individual AI agents got more and more competitive, capital tended to concentrate towards the virtual token itself. So when we look at the individual AI agents relative to the virtual price, we tend to see a downward trend. In other words, the individual assets tend to underperform. Now, how will this develop in the Pump.fun ecosystem? Because Pump.fun launched very differently, right? We did not have a native ecosystem token for a long time. We did have a lot of individual meme coins. Now that meme coin trading did slow down though. And that's in the nature of the game, because meme coin trading is player versus player. There's no value creation. Over time, the capital concentrates towards the few winners, right? If you're a winner in trading and you make a 10x, then on average, 9 other people have to lose all of their money. At least that's true for ecosystems that aren't growing anymore and that don't provide any value outside of just the exchange across the traders. Now here's the number of deployed transactions on Pump.fun, and that peaked at the beginning of the year and since then is coming down very rapidly. And that's not really a surprise, given that the capital has now concentrated towards the few winners, right? It's very similar to what happened with NFT trading. Now we are seeing the same development for meme coins on Solana. Yes, Pump.fun did help Solana as a whole, right? The number of transactions on Solana went up. But if we look at the transactions that are not Pump.fun related, that's still growing. Pump.fun itself is not growing anymore. Actually, I don't even think that it's necessarily the lackluster development of the usage of the platform that's causing the current price decline. Yes, of course, it would be great if the platform itself saw some growth that would help the price, but currently this price crash in that accelerated form is not just because the platform is used less. I've got a suspicion, and that suspicion is that there is secret selling, maybe over-the-counter selling of Pump tokens. Because officially, the supply of Pump tokens is steady and the unlocks will happen far out in the future. But sometimes we see over-the-counter dealings, OTC dealings, people that buy the Pump token today for a discount from the team to then get it unlocked later on in the future. So maybe parts of the early investors and of the team, they already want to offload now and they do those OTC deals and are okay to get that discount. We saw something very similar for MantraDAO, or the Ohm token. Officially, there was very little token inflation at the time. The supply didn't really grow much. But unofficially, the price developed very, very differently. The market cap went from 6 billion all the way down to 200 million. And the reason, again, was over-the-counter dealings, as Coffeezilla showed in an interview with the founder of MantraDAO. The crypto ecosystem has a lot of correlation, right? When Bitcoin and Ethereum and Solana is going up, then most altcoins go up as well, and vice versa. Thus, I like to look at the idiosyncratic movements. How is an altcoin doing relative to its ecosystem token? So let's say an altcoin is on the Ethereum chain. I like to look at the relative valuation to Ethereum. If a token is on Solana, I like to look at the relative valuation to Solana. Does it make sense to buy something like the Pump token over Solana, given the valuation, as we are taking on more risk with that small individual altcoin? For the Pump token, of course, so far this has not been the case. But what's also interesting with this chart, this is an hourly chart, is how little volatility there is in this underperformance. In the last 9 days, the Pump token underperformed Solana by 60%. And I do believe there's a good chance that this will continue, because there is an immediate driver for this. It's of course over-the-counter dealings, but there's something else as well. Right now, the market cap of Pump is roughly 1 billion. And there's no reason to believe why this could not fall another 50%. On the Solana chain, we've got 58,000 holders roughly, and the attention tends to rather decline. What we see over here is the number of first-time traders versus recurring traders per day. On the first day, we had more than 15,000 wallets interacting with the token. Now we tend to be below 5,000 most days. Here's the trading volume over time. So on the left side in US dollars, on the right side normalized to 100%. At the beginning, the small retail investor tended to buy more and more of the token. And now medium-sized investors tend to take over a bit more of the trading volume. Still, what's happening is that the number of small retail investors and whale investors all go down over time. The whale investors started even selling a bit earlier. Small retail continued to buy up until the 15th of July, but it's now also declining rather rapidly. And it seems like, relatively speaking, the number of whales is going down the fastest. Now, this is not in US dollars. This is measured in the number of tokens. So to be counted for the left chart, a wallet has to hold at least 300,000 tokens. So that's $1,000 worth of the token. In the middle, it's $10,000. On the right, it's $100,000. So the wallets with at least $100,000 worth of Pump token, they are declining in number. So likely we've got over-the-counter dealers. We definitely have all of the wallet cohorts selling. But there's a third reason why this is going down. And here is that reason. And that reason might stay valid for a few more days. It shows the open interest on the perpetual futures. There is correlation between how many bets are made on a price versus where the price is. And since this is now declining since the 16th of July, from 900 million to now down to 450 million, we've got additional selling pressure on the spot market as well. Now, this will not go on forever, right? It will probably continue to drop maybe another 3-4 days. But after that, the open interest will be at a somewhat comfortable low level, can't drop much more. And then the deleveraging won't put more selling pressure on the price. So I do think there's a good case to be made that the Pump token will go down over the next few days. Will it go down very long term? Probably as well. But after an initial drop, could we see potentially a short squeeze, some more volatility? That's true as well. So I don't think now is a good time to buy the Pump token. If you're considering to get in, I'd at least wait until the open interest is at a low. I think right now on the grander scheme, if we just zoom out, I do think there's a good case to be made that long-term Pump will continue to do worse, at least compared to Bitcoin and Solana. But the road down south might be somewhat bumpy, especially as we see the open interest of the Pump token on other centralized exchanges going up. Currently, the bets on the price are dominated by hyperliquid, but this will likely change over time. Now, it's interesting how those crypto cycles develop over time. As the price is going higher and higher, Bitcoin reaches new all-time highs, new people enter the space because the media is covering Bitcoin. People are wondering, should I also invest in the asset? The problem is most people don't just stick with Bitcoin. Most people want to figure out what's the next Bitcoin. Bitcoin is already high. Is there maybe another cryptocurrency that can do the 10x or the 100x returns? And that's then where crypto YouTube becomes a problem, right? Because many YouTubers pretend they know what the next 100 or 1000x altcoin is. Unfortunately, again, if you're trying to buy those altcoins, you're getting burned. Most people that enter the crypto space with those small altcoins just lose the majority of their funds. They have to make the losses first, then afterwards come to conclusions to potentially approach the market slightly differently. Because maybe that's you. In the last year, Bitcoin appreciated appreciated by 78%. But have a look at what those smaller altcoins did. How many of them did more than that? There is UPC, there is Cult, there's Dragon and Hosky, but the vast majority of these smaller altcoins lost massively. Now this is true for the altcoins from the market rank 900 to 1000. It's also true for the altcoins between 800 and 900. It's the same everywhere. Outperforming the already high return of Bitcoin is extremely hard. And I don't think the right approach is to find the one or two altcoins that might do so temporarily. There's another approach, and I'm using that approach for almost 4 years now. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line in terms of return. But I got the return in black. So I outperformed just dollar cost averaging into Bitcoin massively. And it was not by trying to find the next Hosky or the next Dragon. Because here's how this channel is different. Most other channels, they take money from crypto projects or they buy a small crypto project and then use the YouTube audience just to shill the token, right? To just push up the token, generate some attention, then create some purchase orders with that and then dump on the audience. This is what most of crypto YouTube is doing. I never took any money from any crypto project and I never buy a cryptocurrency before talking about this here on this channel. I don't pump and dump on this audience. I'm also trying to be different by being more transparent, as in I share my performance. So the long-term performance versus Bitcoin we've just seen, but I've also now started trading with relative valuation bets using perpetual futures. Now this might have been a mouthful, but the idea is we want to bet on most altcoins doing worse than Bitcoin, Ethereum and Solana over time, because most altcoins go down over time. And here is when I started with perpetual futures trading. So this is a chart that's roughly 2.5 months only in duration. But during that time, I turned roughly 40K into roughly 60K, a 50% increase, again, in just 2.5 months. And I'm even going one step further. I don't just share my performance, I also want now the community to participate in that performance. I've launched a capital pool on a decentralized finance protocol called Hyperliquid, where a few select people get access to copy trading. So simply just provide some capital and get the same kind of performance. This started 2.5 weeks ago. It's so far up 4.7%. And I'm trying to push up the APR even further than that. The target is to maybe reach 50 to 60% APY. And here's how I'm doing this. I'm not trying to find the next altcoin. I'm not promoting small meme coins where I then dump on the audience. I'm doing the exact opposite. Because here's the reality of the altcoin market. Most altcoins work in a way of an expanding supply. So the project starts with just a small market cap and a small allocation of tokens that are floating. And then over time, the early investors, so the venture capitalists and the team and the other influencers that got paid in the token, they might get those tokens unlocked over time. So they don't get access to the tokens directly. They can only sell after a while. And they sell via that expanding token unlock. So what we see here is an example. This is the circulating BAL tokens over time. So this is Balancer. Balancer started out with roughly 19 million tokens and then expanded all the way up to 69 million tokens. The additional supply went to the founders, to advisors, to investors, and also to the usage of the platform. And so, surprise, surprise, Balancer underperformed Bitcoin very, very constantly. And this is just one small example. This website here, right, Tokenomics.ai, tracks how many tokens get unlocked over time. And on average, we have hundreds of millions of dollars that get unlocked. So if there is not as much inflow every single week in crypto, all those altcoins will do worse than BTC. And so the trick is really to turn this around. So instead of buying the next Balancer, instead of trying to find the next 10 or 100x altcoin, we are flipping the situation around. When the insiders are dumping, we make money. So here's what we are doing. We are betting on falling prices of Balancer and we go long in Ethereum. So suddenly we've got massive, massive outperformance. We can go long in Ethereum, we can go long in Bitcoin. It's the same thing. Bitcoin, Ethereum and Solana are the only cryptocurrencies worth holding over the long term, where we don't have to rotate too much. And since beginning of the year, this particular trade already made more than 100%. Now, isn't it better to get into a position like this instead of finding the outlier in a sea that's all red. It seems more straightforward, right? It seems more intuitive. Let's just buy an altcoin and hope we pick the right one. It's an easy strategy to explain, but just because it's easy doesn't mean it's profitable. People lose with this strategy, especially beginners that don't know what they're doing, that just believe all of those random crypto YouTubers that say they know the next 100 and 1000x return coin. So a chart like this is the reason why I've got this long-term outperformance versus Bitcoin. Bitcoin already has very nice long-term returns. I think it's around 30% per annum, given the inflows that we currently see. If we want to outperform this, we can just bet on the relative valuation. The garbage will stay garbage. The garbage will not suddenly turn around and become better than Bitcoin. And so have a look at the individual trades of our community, right? This is a few wins that are shared by the members. There are potentially even hundreds of percent in single trades. And what matters, of course, is risk management as well. Now, the vast majority of people in crypto lose, and that's in the nature of things, right? If we double our money, somebody else has to lose everything if the market as a whole isn't growing. Thus, if we want to get outperformance, we have to take it from somewhere. Now, my target with this community is to make the majority of us here winners within crypto. So the rest is okay to lose, but we want to be winners, and we do this by having an edge, by doing strategies that most people don't follow. And so here's my offer. I want to make everybody become a winner once they join this community, the premium community of this channel. And here's how I do this. You just have to watch two videos. This one over here, using perpetual futures on Hyperliquid to bet on relative valuations, and this one over here, risk management with relative valuation bets. It's very, very important you watch both of those videos. It's 1 hour in total, a bit more than that. And once you've watched that, I will share this trade with you. It's not Balancer, it's something else, but it continues to outperform extremely constantly as well. And I'm that confident in that trade that in case you do not make money with this trade in the first month, so if you enter on day 1, you exit on day 30 or 31, and you don't make money with the trade, then I will refund the entire premium membership fee for you. Yes, I do take a little bit of risk with that offer, right? There are some phases where this chart is not going up in the span of a month. But in general, the odds are very much in our favor that this will continue to print money. Buying this chart over here, again, which is caused by token inflation, is much, much better than trying to find the next Hosky based on a YouTuber that doesn't really know what they're talking about. And so here's that membership fee. It's $125 per month. Again, it gets refunded in case you don't make money with that first trade. Simply join, watch those 2 videos, execute on the trade, make your first money back, and then hopefully learn more along the way. Because that's the long-term plan, right? We want to skill up as much as possible, help each other in the community as well, share potential trading ideas, and then become the small group of winners in a vast sea of losers in this player versus player crypto game. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.